Lithium truly has been one of the hottest sectors on the market over the past couple of years. Investors continue to search for opportunities to get exposure to this clean energy megatrend and the EV adoption that's playing out in front of our eyes. This past period, we've talked about many different lithium companies on the market. We've done videos talking about different cohorts of the lithium sector, whether it's early stage developers, near-term producers. But today we're going to unpack 4 current producers on the ASX markets, and investors are really looking at the opportunities that these could potentially provide as exposure to the elevated lithium prices that continue to go higher and higher and higher. I hope you enjoy this market update. We'll talk about the lithium market, the supply-demand dynamics, and some recent news in the lithium space, before discussing these 4 ASX lithium producers and having a bit of a think about what the future might hold. If you do enjoy this video, don't forget to hit the like button, make sure you've subscribed, turn your bell notifications on as well, and you won't miss any of our daily episodes. So before discussing the stocks and having a think about the space, it makes sense for us to take that step back and have a think about what's been happening to the lithium market. Of course, we've done many different videos on the channel over this past period. In the near-term producers video that we'll leave a link to after this one, we talked about the life cycle of a miner. And of course, we understand that as things progress from explorer to developer, before construction and ultimately production, you're looking for different things at different stages of the chain. But we know that there has been a focus over this past period with the localization of supply chains to really focus on opportunities to capture more value down the value chain and really look for downstream diversification. That's going to be a theme throughout the discussion that we have today, so it's worth thinking in mind. In terms of those high-level thoughts, we see that consumer demand continues to rise. You only have to look at some of Tesla's recent numbers, but also there's been increased investment from the incumbent automakers. From Volkswagen to Stellantis, GM, Ford, these companies are really putting money and capital and resources to really get behind this transition and that's playing out. We know there's been a lot more focus on ESG, there's a lot more eyes on the space, and it really does look like this transition is here and now. It's no longer potentially in the future this may happen. It's playing out in front of our eyes, and investment's really trying to keep up with the pace that it's been playing out. And so that then leads us to the supply and demand dynamic. Of course, as we know, prices have continued to soar, but prices of underlying commodities are really just a function of supply and demand. If we think back to the trajectory of the underlying commodity prices for the lithium space, we had the boom in 17-18, then there was the bust and there was very low prices in 18-19 before we got the price signal at the back end of 2020. But we know that when there's lower prices, there's going to be lower investment, projects are potentially put into care and maintenance, or they're just put on hold. And as a result of that, there was not a lot of supply that came online in that past period. But now we've had that initial price signal. As demand has started to rise, lithium supply cannot currently come online fast enough to meet this demand. And that's why we've seen prices continue to go higher and higher and higher. And it's been really fascinating to watch this dynamic play out. There hasn't been a huge amount of spare tonnage at all, latent tonnage to sell into the spot markets. And it's also worth noting as well that the broader space, like many sectors on the market, has not been immune to logistical challenges, worker shortages that have only been exacerbated by, of course, the Omicron flare-up, and higher operating expenditure as a result. There is, of course, some counterbalances to these discussions as well. Of course, we know that eventually, as price signals happen, like we've seen in spades over this past period, supply will try to come online. And so there is going to be a supply side reaction. And so ultimately we could reach that equilibrium where supply and demand basically start to even themselves out and we see a moderation in the prices. Then on the other side as well, there is the discussion about substitute fuel potentially. But I think it is worth noting as well, just thinking about how long it's taken us to get to this stage now with lithium-ion batteries, thinking about the cost curve and how long it's taken to come down and get them to a commercial scale. And so it's not as if we can just easily and rapidly substitute for an alternative fuel. However, the supply side reaction is a discussion worth having. And so I think it is worth thinking about some recent news events to really give us that context. And so of course the question is, why can't we just bring on more supply? I think just some of these recent news articles with some of the leading Australian resources companies gives us a bit of an insight into the challenges that we may continue to face moving forward into the next decade. Of course, we know that Rio Tinto were recently trying to bring a project online in Serbia. However, unfortunately, their licenses, they did not get approval for that and they have had to scrap that Serbian project now. They did then look to make an acquisition with a Rincon lithium project in the Lithium Triangle, but it speaks to the difficulties that companies may face about bringing projects online. There are a lot of exciting projects, but not all of them are going to come online. And the more difficulties there are, and if demand continues to rise, we know economics 101. Of course, if supply stays the same, but demand continues to rise, then we could continue to see price pressures until supply can come online at scale, which will eventually help to ease those pressures. Then on the other side as well, Pilbara Minerals. Of course, Pilbara has been one of the leading companies on the ASX in the lithium space over this past period. They truly have become a bellwether for the sector. They've continued to move higher and higher and higher, and PLS shareholders have definitely been happy over this past period with some incredible growth. But they are looking at continuing to expand, continuing to be able to feed into the demand that is here and now. But they have had some delays, unfortunately, in terms of that. These have been as a result of the border closures that are extended in Western Australia. Of course, that makes it difficult to get the sufficient workers and the labour force that you need to really bring these projects online or really be able to continue to expand them. So they've highlighted these as some potential delays and amended some of their guidance. It is worth noting as well that, of course, we're starting to return back to a new normal in society. But we're not going to go back to 2018-19 immediately. It's a new normal. We're going to have to get used to delays. There's going to continue to be bottlenecks, difficulties with logistics. And so bringing supply online is not that simple. And lithium projects are definitely not as simple as some of the other types of materials out there as well. And so ultimately, that all feeds into the final end result, which is that current lithium producers are exposed to the elevated prices here and now. Of course, earlier stage, longer term, future focused projects that are in the development stage, they've got great opportunities to feed into long-term demand, but of course they don't get that exposure to the here and now. And so current term producers, including the 4 that we'll talk about today in this video, that's why they're attracting a lot of excitement. I'd love to know your thoughts on it all, so drop in a comment below what you think about the lithium space, which companies you're watching in the space, and what you think about any of the companies we do discuss. And of course, before we dive in, just a standard reminder, I'm just a bloke on the internet who loves talking about the market. I'm obviously not a financial advisor, and nothing we discuss is financial advice. Stocks aren't buy recommendations, but hopefully it's an interesting starting spot for you to go away and do your own research from. And so our first ASX lithium producer to discuss today is Allkem. ASX AKE in their current form is actually one of the most recent additions to the ASX exchange, but investors will be very familiar with the composition of both Orocobre, ORE, and Galaxy Resources, GXY, that in their own rights were both leading producers previously, but they've come together to bring together really one of the leading top 5 global lithium chemicals businesses. You can see here on the right, they've got a truly global offering. Of course, they're focused not only on the extraction and the upstream process, but with their Naraha opportunity, they're really looking at that downstream as well. And there is a focus at really becoming a leading chemicals business, not only just a miner, but that really is in the name Allkem there. Having a look at some of their key resources or their key projects, Mount Cattlin is currently in production. It's currently in operation, around 230,000 tonne per annum of spodumene concentrate. Then they've got Olaroz, which is in the Lithium Triangle, along with Cauchari. They own 66.5%, so around about 2/3 of the Olaroz project. And it produced 3,500 tonnes of lithium carbonate in the December quarter. But ultimately, they're looking to bring on, in the second half of 2022, the start of course, they'll continue to scale and expand into this, but they're hoping to bring online a second stage of up to 25,000 tonnes per annum. And that will really allow them to feed into this demand that is here now. Then the Naraha opportunities, that downstream one, they've got a 75% ownership of the Naraha project, which is a conversion facility. It will ultimately have 10,000 tonne per annum to convert lithium carbonate through to lithium hydroxide and be able to feed into the market demand there. And they're hoping to complete and then commission that in the first half of 2022. So there are some near-term catalysts. Of course, they're currently producing now, but there's plenty to look forward to for ASX AKE. They're around that $6 billion market cap level. Next up is Mineral Resources. ASX MIN actually have a core component of their offering, which is mining services. So they predominantly focus or they specialize in these build, own, and operate projects where they have the ability to provide capital infrastructure as well as operational expertise. You can see here it's scheduled to continue to average really good solid growth year on year, 15, 20%, really over these next 5 years and feed into this potential commodity super cycle that we're seeing evolving in front of our eyes. On the iron ore side, it's a smaller iron ore operation, but they're looking to transition to lower cost, long life mines, continue to scale, continue to add on throughput there. And the lithium side is, of course, what we're here to discuss today and what's attracting a lot of excitement. ASX MIN has around about a $10 billion market cap. They've got a JV, a joint venture with Ganfeng for their Mount Marion project. Their Wadgina project is actually currently in the process of coming out of care and maintenance and being restarted, which they're hoping to have over this next period. So of course that brings a lot of excitement. And as you can see here, they have a couple of the largest hard rock deposits as well. So plenty of opportunity to feed into this demand, but also for long life of mines to really ride out this EV transition and this broader clean energy transition that we're seeing play out. You can see here in terms of scale level, ultimately they're looking over the next 5 years, which is not that far away, to become a top leading global producer, targeting over 1,000 tons per annum of lithium hydroxide. And so having that opportunity to really feed into the downstream as well, like many of these other companies. The third company on the list today is IGO. ASX IGO, similar-ish kind of scale to Mineral Resources, $9 billion in terms of market cap. They've got their Nova project, which has reached nameplate production capacity now, 100% ownership of that. It's a nickel, copper, cobalt project, and it's been producing for a few years now. But then on the other side as well, on the lithium side, they have exposure to the Greenbushes project, which truly is, as many lithium investors will know, one of the top projects in the world. It's the world's lowest cost and highest grade mine, absolutely massive resource as well. They have a 49% joint venture with Tianqi, one of the Chinese producers, and as a result of that, they have a 25% ownership as part of that broader Greenbushes partnership with Tianqi and then Albemarle. There are plans to continue to scale the capacity on that front. And then they also own around about half or 49% of the Kwinana lithium hydroxide facility. It's one of the world's first fully automated lithium hydroxide facilities, the first in Australia, and they're hoping to really move that towards production moving forward. They do have a budget, significant budget, over $60 million for FY22 in terms of exploration. They've got a range of different projects in Australia that they're looking to move towards, continuing to define resources and then bring those online. You can see here as well in terms of forecasted or historic and then forecasted EBITDA. They're looking to scale up above that $1 billion mark on EBITDA. Of course, as we know, when you're looking at producers, you're valuing them on EBITDA multiples or cash flow multiples. So you really can start to get a sense of the scale of the IGO opportunity as they continue to scale moving forward. And then the fourth ASX lithium producer on the list for today is Pilbara Minerals. ASX PLS has truly been one of the leading lights on the ASX lithium front over the past period. They've got a one operation, two processing plant offering, both centered in Western Australia. Their Pilgan Plant is currently producing over 300,000 tonne per annum of spodumene concentrate. The opportunity potentially to improve 10 to 15% in terms of some operational improvements, and then looking to continue to scale that as well with a further expansion case. And then in their other plant, they've actually acquired this in FY21 from Altura, bringing it out of care and maintenance. Final investment decision for a stage restart is in the middle of this year. And then they'll be targeting up to 200,000 tonne per annum. So that'll give about a combined 500,000 TPA between those two plants. And with future expansion opportunities aiming for above a combined 1 million TPA of spodumene concentrate. But of course, feeding into the discussion like we have with some of the other companies from today, they're not only just wanting to pull the resource out of the ground, they want to look further downstream. They're looking at a midstream JV, potentially with Calix. It's in the early scoping stages at the moment, but contingent on success on that front, they'll look to form a JV with Calix for some technologies to see how they can refine midstream for some lithium salts. And then they have a JV with POSCO, the leading global conglomerate who many might be familiar with. They've done a range of different investments actually on the ASX and the Australian resources front over this past period, but this is for a downside hydroxide facility. So there's a lot of excitement for Pilbara to continue to scale their extraction and their mining operations, but also look downstream and really become a true leading global player as they already are as well. And just another fascinating component of the Pilbara offering was this BMX auction. I'm sure you might have heard of the Battery Material Exchange auction over this past period. It's become quite an insight and quite a snap assessment of the state of the lithium market. It's of course giving some insights into the trajectory of the prices. We can see how much they've scaled from the inaugural auction through to the third online auction. And of course, as they continue to bring more auctions online, it gives a quick pulse check for investors and for analysts to get an idea about how the lithium sector is going. It's continued to heat up. We know that demand for the lithium space is, of course, continuing to grow as demand for electric vehicles does. It's going to be very interesting to see how this supply dynamic plays out. Will we see a broader supply side reaction? And most importantly, how fast can supply come online over this next period? If you are interested in the broader lithium space, we've looked into a range of different lithium companies and done plenty of videos over this past period. We'll leave a link up above to a video discussing some near-term producers looking to bring their lithium projects online over the next year. We've also interviewed a range of different ASX CEOs with companies in the lithium space that we'll leave links to that you can check out after this one. If you enjoyed the video, don't forget to hit the like button. Make sure you've subscribed, turn your bell notification on so you won't miss any of our daily episodes. Feel free to share it out, and a big thank you for joining us. For now, stay well and happy investing.